All right. So today we had the CPI data and SPY was down 0.61%. And even before we knew the CPI data, it was very clear there was a high probability that today was going to be a pullback, which is very evident by yesterday's video. And I even put it in the thumbnail that from resistance, we were likely due for a pullback. So tonight I'll do a quick lesson on how I knew this, and I'll show you exactly how you could have stacked the odds in your favor, and that is exactly what we did on the Stocks Channel Discord today, because it was a very clear low risk short trade, meaning that even if we were wrong, we were only going to lose a small amount for the potential to make a decent amount. Remember what I always teach you about stacking the odds in your favor and getting those great risk reward ratios, which is the same thing we did when we went long at SPY 420. So how I knew it was a great short trade today is, first of all, SPY was at this critical resistance right here at 436, knowing that even if we went a little bit higher, we were likely just going to fill that gap and then start to invite sellers. And then in parallel, if you look at the triple Qs, we hit the downtrending trend line, which is defining the current downtrend of lower highs and lower lows, which was that resistance just above 373.6. So when you combine a low risk short entry on SPY with the low risk short entry that we had on the triple Qs, I will take that trade 10 times out of 10, knowing that we had very low probability to lose a lot of money sitting at critical resistance on both major indices. And if you look at the triple Qs, we were also near the upper Bollinger Band.
So not a bad analysis. I mean, it's purely technical, but I consider these analysis, not this channel, at least this video is better. It has a better analysis than Brian Shannon. But it's still mainly just technical analysis in the sense of, well, what I call after the fact analysis, right? The results of the day, then they draw lines and they go, well, look, it it retraced because of that significant level on the right here, right? It fell at this indicator right here and it went down, but it could have easily went up and kept going, right? And the analysis would say, well, once it broke this trend line or this, significant level, it's gonna break out, and then they'll do the video saying it'll this is the reason why it broke out. But as far as the lines and the technical analysis, it's not bad in my opinion. But the way I approach things is I do forward looking, right? So during the day, and I'll show you the extended hours, right? I had come to the conclusion that the CPI was most likely going to be good, and that it was going to be up for the day, right? Because I was expecting the CPI to be good in the sense that it's going to be lower because a lot of the equities or a lot of the ETFs that were tracking the CPI, like the commodities, energies, real estates, retails, all of them has been going downward. And so my expectation was that the CPI was going to be good and it was going to go higher, but it came in bad, right? And I'm gonna talk about that a little bit more in detail. But the minute it came in bad, this result, I knew the day was going to be essentially the day was going to be a lower day, regardless of what it performs intraday. Um, Now, this keep in mind the PPI also came in bad. And yesterday, I believe it went down, right? So the PPI came in bad as well. And then the CPI came in bad. However, if you were to look at the results from today, you probably would have gotten tricked because it did sort of broke out. If you look at it on the SPY, it looked like it broke out just a little bit above higher, right here. And right here, it's a little looks like it was about to break out, then it just sold off, right? So this sell-off was a little bit difficult to get in if unless you time it perfectly. However, if you are leaning shorts, you would anticipate some kind of short entry, anywhere along here, and reap this reward. Now, why would you anticipate short? Because, like I said, the CPI had come in bad, right? Here's the CPI. It had come in higher than expectation. Um, Green, right? A little bit higher, but it's still higher than expectation. And the initial reaction, like I said, if you looking at the initial reaction right on the release of the number right here, it came down. So the anticipation for the day was that it was going to be a uh, lower day. Now, the thing about it was that this, is a little bit tricky because the MACD was going positive, even though initially it gone down in the first 60-minute candle. It started to go higher, and this is where I started worrying because I was saying, man, it might break out, right? It might break out because it just the strength of it was very strong. But I held on to the conviction also because I was looking at the the calls and the puts, and the puts volume were being bought up during the initial, comparing to the call volume. The puts volume will be bought up, and if you pay attention to this it as the price action goes on, you can actually kind of interpret. It's not 100%, but you can kind of interpret what eventually is going to happen. Was that it was going to close lower for the day. Although I do admit these lines right here, I did not anticipate, right? But looking at it now, you can kind of see. I'll probably draw in these lines from this channel. This is good technical analysis in the sense that these lines, they show something, right? In the Bollinger Bands, I don't really pay too much attention because forward-looking analysis base everything on anticipation of what will happen with the results that comes in. So my anticipation was that, after the results of the CPI, right, eventually, so this right here is somewhat the results of the CPI. And I was thinking eventually they're going to start thinking about tomorrow, which is it's Friday the 13th. But the other thing about tomorrow is this CPI number. I'm not the CPI, the consumer sentiment number, which I was anticipating is going to be higher than expectation, higher than forecast. That is going to be a negative bias to the market. So on this release, the release of the number, my expectation is that it's going to be higher, and there's going to be a reaction to the downside. So if that is the expectation, what am I seeing to confirm that? Well, look, it's going to be higher tomorrow morning. In the way I'm looking at this, my expectation is going to gap up tomorrow because of this doji, right? So this doji is gapping up. Um, this doji tail will most likely result in a gap up, and the future is already indicating that it's probably going to gap up. However, you can see that the MACD is starting to go red on the negative side. So the completion of the MACD, this candle tomorrow should be a green candle, but it's gonna be a red close in my opinion, or it might be. Actually, I don't know what it's gonna close because it is option expiration tomorrow. So it could easily gap up, retrace on the consumer sentiment. So that's MACD. It's going to go essentially start to go green, even though there's going to be retracing on the consumer sentiment. And it may come down to the 60-minute, test it again, and then go up. So it'll be something like this tomorrow on the release of the consumer sentiment. Then they're gonna ramp it back up. even though I do see that this MACD, right? This MACD is starting on the 4 hour, is starting to go red. So that potential is there as well, right? So because it's option expiration Friday, it's actually quite difficult to determine what the day is going to end. However, I mean, overall, the bias, potentially the bias is still positive in my opinion, given that I think earnings will start coming in. Let me see if the banks, I think some of the banks, Bank of America, I think some of the banks are releasing earnings tomorrow. So that might also be a catalyst of what may come eventually. Let's see if it's Bank of America. Um, Yeah, so earnings is coming up for the banks. So some of the banks are releasing earnings. Actually, Wells Fargo is releasing earnings, and that should be okay. Because you can see, look, it's starting to go green on the MACD on the daily. So that is also gonna be a positive bias on the release tomorrow for the banks. Most likely, this is gonna be released in the morning. Citigroup, I think, is the other one that may, yeah, Citigroup is gonna release it tomorrow. So that's gonna be green for tomorrow, and then you're gonna see this pullback with the consumer sentiment as the consumer sentiment comes in good. Then that's gonna complete the MACD. After that retracement down, it's gonna start going back up, and it's gonna start the MACD going into the green, going toward this way for Monday as well. Because I don't think there should be anything on Monday next week. Yeah, Monday is nothing. So that's, and then the retail sales is going to be, that is going to also be negative for the stock market because I think this retail sale is going to be pretty good. For whatever reason, I don't know why. I just think it will be. I may have to look at the chart, but let's just finish up and looking at these charts. CPIs was starting to go down, now it's starting to go up. Um, so that's the CPI. This is the PPI again. The producer price index starting to go up. So long term wise, this is going to be pretty negative because the other thing is the Fed's funds, right? The Fed rate monitor. It went, let me see, current probability. Yeah, actually, the current probability actually went lower. If you looked at it intraday, meaning it was like at 81%, I think, the current probability, and then I guess it closed at 91. So it's still in the previous week is 80. So the trend is obviously still very high for a no rate cut on the November meeting. And here it says it's meeting on November 1st. I don't think that's the case, but if it is, it's coming up pretty soon for the next meeting. But yeah, I would say everything is pointing to positive um, for the stock market, even though some of the numbers are going to come in negative as far as, the immediate reaction is going to be downside, uh, toward the downside, meaning I would think the consumer sentiment is going to react negatively, and then Tuesday retail sales is going to start acting negative. The housing starts is going to be negative, and so this is going to be negative as well. So you got the retail sales and the housing sales or the housing starts on the negative, but I don't think these numbers matters too much as far as the overall traders sentiment with earnings coming as well. And most people are going to be looking at this, right? The trend of what is the probability, what's the Fed's going to do in the next meeting, and also their sentiments going forward. So their meetings is most likely going to be negative as well, because you can see they are looking at the same thing we are looking. They're seeing the PPIs going up, they're seeing the CPIs going up, and also the non-farm payroll. Right here is the non-farm payroll is also going up. So they have a dual mandate of inflation and jobs. And so if jobs are continuing to, and you can see this is the results for September, October, and then November. So if November comes in pretty good, what they're gonna say in their next meeting is going to be pretty hawkish, meaning negative as far as their sentiments or their bias going forward. So yeah, anything? Let me go ahead and continue to see what he has to say.
You can comfortably short at very critical resistance levels, and when you hit critical resistance on the triple Qs and SPY in the same day, that is only increasing your probabilities. And then likewise, if we go back to SPY and we turn this on the hourly chart, you can also see that we had that double top rejection from the high, and then we came down here and broke down below the neckline. And you can probably see all we did intraday is bounce back up to test the neckline, which means there's still the chance we get rejected and go hit the full price target of.
So yeah, this is this the hourly? Yes. So I did see something right here, right? Look, it did hit the 60-minute trend line, and I'm assuming that is what this is. This is a 60-minute trend line. But there's also a Fibonacci right here, that I was paying attention to. So let's see what the SPY during the day. Yeah, so it went down to the 60-minute. I definitely saw that, and I was considering going long, but I continue to hold shorts. I closed my shorts. I'm not holding any. I'm holding two straddle right now. A call and a puts on selling them. But overall, I'm not holding any position aggressively, because of this potential right here of going up. Now, I am quite disappointed it didn't break, because normally when you have this type of movement right here, right, here's that Fibonacci again, here's that 60-minute. I mean, normally it'll do something like that and then it'll break or some more. So this is pretty bullish, right? And so this MACD on the 60 is going to continue to go toward the positive side. So what he's saying here is absolutely incorrect. Now, he could be right, but most likely no. From what I'm seeing, it's gonna gap up. It's gonna continue to go higher. It's very bullish. It's option expiration. And the other thing I noticed was these volumes were coming in really strong, and I was like, what the heck is going on, right? Like, why are they buying this? And so it's very bullish. Now I don't know who is buying this or what's going on. I don't know the the reason behind this. All I do is I see it, right, and then I'm trying to interpret. When you see something like this, where all of a sudden this like huge volume like this, you're gonna be like something is going up, right? Because on the short side, on the puts, there wasn't that many shorts being bought on the way down, right? Uh, if you look at this compared to the other one, it wasn't like on the way down there was a lot of volume, right? There wasn't a lot of volume on the put side, and that doesn't necessarily mean the volume sometimes it will come in, right? Once it starts to go boom, it will come a lot, right? And then the volume here, it starts that's the other thing I guess I didn't really see, or was I was hoping for, was a higher spikes on these volumes, but they didn't come in. And instead the volumes on the call options came in, and that's indication that it was gonna rally, and most likely it's gonna keep going up. So yes, I would say it's a bullish sentiment. Even though I do not like the fact that this MACD right here is starting to go red. Yeah, it could be. I don't know. I don't know what that means. All I know is right now it looks like it should go higher. But let's go ahead and see what else he says.
Of this double top. So going into tomorrow, even though we did start to bounce intraday, we still have this double top that could still resolve into lower prices. So don't be surprised if the bears continue to short and the bulls continue to lock their profits, which is exactly what I've been telling you I wanted to see on SPY. Is eventually I wanted to get a pullback into a higher low and then get confirmation of a higher high breakout.
Now it may do this on the consumer sentiment, right? So this is actually this whole thing about you know, bears shorting and bulls taking profit. No, that's not how it works. 100% that's not how it works. They're gonna react based on the numbers that come in. 100%, right? So the numbers coming in, most likely I'm anticipating a higher consumer sentiment, and that's going to most likely result after the gap up. It's going to result in this pullback, sharp pullback, and hit this line, and then this reaction. This is going to be option expiration Friday, even though it is Friday the 13th. Most people think Friday the 13th is going to be negative. I don't think it matters as far as traders are concerned. There's a lot of options being bought. Um, you can say, well, there's a lot of call options, but there's a lot of puts options as well. But I think based on the sentiments of what you're seeing overall, you gotta take a look at the overall picture. You got this doji, you got the MACD, and you got the Fed funds, right? You got the Fed funds being that. Now this could quickly change tomorrow, but I don't see why unless I'm missing something. The VIX is a little bit elevated. It did reverse though, and it's starting to go negative on the VIX as well. So and then you got the banks releasing their numbers, and I don't know if they do guidance. Hopefully they don't do guidance, or at least let's see what I think. I mean, yeah, I need to pay attention on the earnings results more as far as forward looking. But from what I've seen, the banks normally do pretty decent. And I don't see any results why they will release bad numbers tomorrow. But I'm expecting a gap up from that. Then, as he was saying, retracement here with the consumer sentiment and going up because A, the Fed funds rates, B, earnings are coming very quick, and overall the direction just looks to be higher on the positive side, especially with the weekly. You can see that weekly. If it closes higher tomorrow toward this, it may even go to 40. I mean, if that consumer sentiment comes in bad, right? I mean, it could if this consumer sentiment comes in on the negative side, it's not going to reverse. It's just going to break out. It's just going to gap up and it's just going to run. And it's going to run, most likely it's going to run up to this level right here and retest this, retest this right here. If that is the case, going all the way up. Let's see what the weekly. The next point is 4,400, right? Yeah, 40. It's probably gonna. I mean, this is the target I see on the SPX, 4,400, which interestingly is different than the ES, right? ES right now is above. 4,400 doesn't really mean that much. The level of significance for the ES is 4,430, but SPX level of significance is going to be 4,400. So that's my anticipation. Yeah, it's looking positive. Let's go ahead and continue.
as we start to go higher to fill these gaps above. So you can already see how this is all playing into motion and how we are using this strategy to develop a trade plan for low risk entries in both the long direction from SPY 420 and now shorting from this level just below 438. Remember, we're traders, so we don't care what goes to take the short trade. It doesn't matter. I do suggest of your trade win percent suitable, and if you go risk manager and therefore you're going,
Yeah, I think all he's doing is right now trying to advertise, and I don't care about his advertisement. All I care about is his technical analysis. So, looking at the DIA, so the indexes, the only thing I'm seeing that is a dampener is this IWM. But like I say, this result, even though it's 20%, this is the results of the IWM, the small caps. 77 downside by 20 looks very negative, but that doesn't mean anything as far as I mean, I hate to say it, but it doesn't necessarily mean, and I might be self-fulfilling, it doesn't necessarily mean that the market is going to go lower just because the IWM is weak. And maybe I am completely wrong on this one. And this IWM, I mean, like I said, a lot of time the results will come in, and then you do after the fact analysis and say, oh, I should have seen it, right? The IWM is going lower, and I should have, forecasted and say, well, look, the IWM is going lower, therefore people are selling off on the IWM. Therefore, eventually, it's a sector rotation, and eventually the SPX and all the other indexes are going to go down. But that's my old way of doing things. Now I do things based on forward looking, and I look at the economic data, most specifically the Fed fund rates and the economic data that comes in, like the CPI, the PPI, the consumer sentiments, etc., etc. This is the non-farm payrolls, and the fact that earnings is coming up, and these also I think Apple looks like, yeah, Apple looks like it's going to test uh, this point tomorrow. So that is what it looks like tomorrow, is that it's going to go up and break this Fibonacci number and towards probably gonna go to retest this guy. I mean, that's where it looks like it's going. It's gonna break that. So yeah, looking at this is important because these are I guess the seven magnificent stocks or whatever you call it. Microsoft, look at Nvidia, right at the Fibonacci. Let's take a look at that real quick. Nvidia, yeah, okay, so it was breaking out. Then you got that retracement, but that's it's gonna go higher. Tesla is at the. I mean, Tesla. I would love to play Tesla. I don't, because it's just so tricky to play. I can't really figure it out, and I literally, gosh, um, Amazon. I think, yeah, Amazon also did a doji. Almost got to the Fibonacci, but it has a doji. Not sure what's going on there. Let me take a quick look at Amazon right here. Yeah, I guess it's still bullish. I mean, this retracement is causing, and that's the sell-off. That's causing that. And then the consumer sentiment tomorrow may actually cause another reversal. But overall, I don't see anything. I mean, this looks like more good news than bad news. So should be going up